Folks, welcome back to another show of Sell Any Biz, Just Business Talk, where we talk with entrepreneurs and business owners and business professionals who are involved in merger acquisitions and business sales. So today's guest is a very special guest, Pat Linden, founder of Linden Law Firm Partners. Hi, Pat. How are you doing today?
I'm good to hear. Thanks for having me. Appreciate it.
Yeah, thank you for taking time and coming in my show, and I really appreciate it. So, Pat, you have had an incredible journey, and from big law to founding your own boutique law firm. What inspired you to make that leap into entrepreneurship, and how did it shape your career?
Yeah, so I was always pretty businessy at heart and never really kind of intended to end up in law. I was a JD MBA student. I thought that having a law degree would give me a quote unquote edge in business. And then what I learned when I got out is, again, I knew some decent cocktail talk, but had no practical experience, and then kind of figured I'd work in law for a little bit and end up in a company and all that. And ended up working on mergers and acquisitions primarily, and was in some good spots. Worked for some cool people that I liked, and so stayed in it for longer than I expected. Primarily at large firms and all that, but then reached a point where I think because I was an entrepreneurial guy and I was looking at getting into other businesses, and in fact did get into some other businesses and started like an early stage investing fund and all that, and really was into looking at deals and transactions in a different way, and had been a co-founder of some non-law businesses that had sort of differing levels of success. So I kind of took all that together and my entrepreneurial background, my legal background, and decided, 9 years ago, look, I'm going to focus on building sort of a boutique M&A venture capital private equity firm where clients get the benefit of somebody who is entrepreneurial, who's spent their own money, who's made mistakes in businesses, not just looked at things in an ivory tower. And so that was sort of what led to deciding to go out on my own, and in a field where, for the most part, sophisticated deals are going to be housed oftentimes with large law firms, and sometimes it's hard for people to fully appreciate that, hey, we're a sophisticated deal shop of people that have kind of been there, done that, and we help entrepreneurs in their life-changing events. So it's a kind of a professional lifetime of falling into, I guess, where I'm at.
Yeah, amazing journey. So Linden Law Partners. So do you have other partners? So what's your firm structure like? How many partners do you have, and what are your main expertise at your firm?
Yeah. So when I started the firm 15 years ago, it was me. I added a couple employees. We actually then combined with another firm where a business partner that I knew that ended up not working out. And so over a 9-year period, Linden Law Partners has been an amalgamation of started by myself, then had one other equity partner, and two associates, and added some other attorneys as we went. Then when that partnership broke up, it was me and two other then partners from that firm who were non-equity partners, and then hired staff as we went. And as things sit today, I am the lone owner, but what we do is we have, through combination of employed attorneys and what have you, and then a lot of sophisticated deal makers that I've worked with in various ways, where it's almost like we have a very strategic alignment on working together as on deals, and those are referred to as senior counsel people. So I'm the only owner.
Yeah.
But I work deals in tandem with these folks that are part of the firm as partners. So there's not really much to that other than I'm the one who's put up all the money for marketing and all that other kind of stuff. But in terms of our working relationship, it's kind of like very senior people for the most part who work complex deals together.
Great. Yeah, I can share your pain. I'm trying to build also myself a business brokerage platform. It's my fifth year in, and I understand the pain building something. When you build something, so often people they just see the end result or a product, but they don't go through the process of how you build that. So I understand 9 years. So when you were explaining your journey, falling off with the partners, getting in people, so I can just
The partnerships are
relate
really,
with the journey.
you really have to be thoughtful about the way you go about it.
Yeah.
A lot of times people, because the way in which my law firm has started, trials and errors, successes, and its evolution, and to be competitive, highly competitive. We are not set up in a manner where I either would or can hire somebody 4 or 5 years out of a Wall Street law firm who's making $500,000 a year because they have a bunch of Fortune 100 clients, but also has candidly never spent a dime of their own money. Like that model, that would be the quickest way to go out of business.
Yeah.
So what I've found, what has to work in this day and age, you have to have capable people who can do the work at a lower level, but who are also very client facing and have solid EQ, that appreciate an entrepreneurial environment and they want to grow into having that entrepreneurial environment. Maybe they have ambitions of doing their own firm someday. Maybe they have ambitions of taking over my firm, coupled with people who are very senior, and they've been general counsels of big companies. They've been in other capacities with large law firms. They've owned their own law firms, but they're damn good lawyers and frankly business people in terms of communication, management, managing projects appropriately, all those kinds of things. They have quality business sense. That structure, for me, what that has been a lot of time and trial and error and finding those people where what we've put together really works for them, especially in 2024, where people don't necessarily want to be at a law firm working 2,000 hours a year.
Yeah.
I have a securities attorney that splits his time between Denver and Kauai and owns properties over there and is very big into real estate investment. But we might get an M&A deal and it's like, hey, we're going to work this deal together for the next 3 months. And the benefit to me is, they get paid and they get paid handsomely. But they're not sitting drawing $500,000 salary when the market is going like this and that. And so that's there's definitely been trial and error with that model. I think it's an underrated model. It's really worked well for me. Yeah. It just requires you spending the time and energy to find the right people, like a recruiter. And you guys just, candidly, it's like anything to here. It's just like, are you willing to put in the time? And by doing that, that's huge for us, because when it keeps overhead relatively low when it comes to personnel, and we can spend our money on marketing and other stuff. And then, we don't skip a beat when it comes to doing things and sharing profits and all that kind of stuff.
Yeah. So running a law firm is required the same entrepreneurial experience or skills what any other business owner should have, other than being a law expert or a lawyer. So generally,
And I think if you're locked into traditional structures, I mean, I get approached by larger firms all the time, and they go, "Hey, we want to do this. We want to buy you. We want you." But buying in the law firm realm normally means we're going to give you a job. If they really wanted to buy me, believe me, there'd be a number that I would entertain, right? But I look at those things. It's like, okay, well, you're a partner, and whatever the case. But really, what you are is you are like a partner in kind of an old accounting firm, old law firm model. That's just not my thing. I'm way too entrepreneurial for that. I would much rather have a really great deal that I could work together with you, and we're both available, and I go, hey, Tahir, we've done 10 of these. I'm going to get X percent of this. You're going to get Y percent. And we're going to do our thing, and we're going to make a lot of money, and we're going to do really well by the client. So now there can be downsides to that too, because it means that you probably will probably always be a very entrepreneurial firm and all that. But for me, that's what I want. That's what works. That's how we make the most money. That's how we do the best job, and that's how we have the least management, frankly.
Understood. Great. So where are your majority of clients are based in the United States, right?
I'm sorry, can you repeat
where
that?
your majority of clients based as in the US, right?
Yeah, that's a great question, and I hate to give a standard answer, but like it's pretty much industry agnostic, first of all, and that's because in Denver, Colorado for a long time was kind of like a large cow town until basically kind of like the late 90s, early 2000s. It was a large city, but it was a lot of small business.
Yeah.
And so what that meant was, there's really not a lot of, even with very large firms that have a branch in Denver, you kind of are a generalist when it comes to industry, right? So I'm not a big believer that industry matters a whole lot, although there are, of course, advantages if you've done 1,000 deals in this space. But they're not advantages they're overblown advantages versus what every Tom, Dick, and Harry lawyer tries to sell as a sales pitch. So the bottom line is, we represent founders primarily in life-changing events. And that founder could be somebody who has a roofing company that came out of a roofing trade school, and now they've got an asset that's worth $10 million. They obviously have a great business, but they're not going to have been through a private equity deal. They're not going to have dealt with Wall Street type attorneys. They're not going to have dealt with having to try to appropriately take accounting speak and make it deal speak and all that stuff. And they're not going to be familiar with all the negotiating tactics and this, that, and the other, including from selecting their investment banker, the whole 9 yards, right? So the industry could be roofing, HVAC, we've done a lot of fintech, we have done a lot of bricks and mortars, franchise businesses of all types. So do we have to bring in certain specialists to accomplish, if we got a high patent concentrated? Of course, and we bring in a specialist to deal with that particular piece. So, we are more so than an industry, although we have a lot of experience in particular industries, we are really kind of like, we're a group that focuses on the founder when there's probably going to be some form of contingent consideration, hopefully a big chunk of cash, rollover equity perhaps though, maybe a earnout that takes some serious thought to think through and not only structure, but get paid on, which is the name of the game. Post-closing employment that has significant consequences on what does or doesn't happen to your rollover equity, making sure your rollover equity are the same classes as the investors, they can liquidate at the same times.
Right.
You would think all that's straightforward, but when you get into it, it's not. And no private equity investor, institutional investor ever comes at it and says, gee, I'm going to lay all that out for you and cover it. And it doesn't happen that way, unfortunately. So that's really kind of, in a nutshell, what we're all about.
How do you get paid? Do you get paid success fee, or how do you structure the deals in terms of?
It'll depend on the particular arrangement. Typically, our fees are actually hourly. If there are certain things where you have, they're pretty vanilla elements. Two people who know exactly what they want in a partnership or whatever, of course we'll do fixed fees or whatever, and we'll also entertain alternative fees if we're taking on a transaction, and if that transaction gets to the end, if we think we can do it and there's a compelling reason. But here's the caveat to that. The caveat to that is, just like an investment bank or whatever, that deal is going to come at a premium. if we get to the end. And what ends up happening a lot of times, I think, is when people do that analysis of going, hey, I'm going to give you an alternative fee or whatever the case is, oftentimes they're better off hourly. The challenge with hourly is lawyers and in industries abroad, there's been so much, call it unintentional dishonesty, having to meet ridiculous billable hour things that really don't have any interest in the client.
Right.
And so therefore people are not straightforward about it, or they bill for, even if you are an hourly client, you always have to assess, is the value there that you can justify this? And typically, there's always some overlap of something that if you're doing the right thing, you're going to trim that and what have you. But I'm glad you brought this topic up because it's a key topic out there.
Exactly, yeah.
And being an entrepreneur, I've looked at this inside and out, as you can imagine, right? And in certain opportunities where it's like, hey, if I can make $1 million fee because I'll take a deal fee, I'm all about it. Where it gets, however, when the client looks at it though, they might go, wait a second, I might pay you $200 if I paid you hourly. People again are really afraid of the hourly thing, so it requires a lot of education. But when educated, after again tons of time and thought and experimentation, why I think oftentimes you're better off hiring maybe your attorney or other providers on an hourly basis. First of all, you got to trust that person. If you don't trust that person implicitly and they're not going to communicate appropriately, you have a problem to begin with. But secondly, if I get in the middle of a deal, if somebody shows up to me and they go, hey, Pat, I have this private equity company. They've done it 1 million times. They want to buy my company. Great. But you know what? I don't know what your negotiating tendencies are. I don't know if you're going to have a psycho staff that's not going to respond to any of my stuff. I don't know how difficult the attorneys on the other side are going to be. I don't know how responsive you are going to be into information. What I do know is I'm probably going to have to dig in and lawyer very hard. There is no such thing as not lawyering extremely hard. And when I say that, it doesn't mean lawyering so hard that you're marking up commas. It means lawyering hard over shifting a couple $1 million from their side of the ledger to your side of the ledger, or meeting somewhere in between. All the gray in transactions that makes its way through contracts and balance sheets that takes an advisor that sees the whole picture. That's what I mean by lawyering hard. So when you really cut back down to that here, what does it mean? It means I go into a client and I go, you need to be prepared to spend $100,000 to $150,000 or $200,000 or $50,000. It kind of depends. But for the most part, I will educate them on the process. There's a retainer. A lot of times we get the retainer, but by the time we get into the deal, we're only practically getting paid if and when that deal closes. So we have a lot of skin in the game oftentimes too. But that is the ultimate arrangement, because most of the time I haven't had the ability to take you to market like an investment banker, where I have a great pulse on what is or isn't going to happen by that time. And it ends up typically being in the client's best interest. I've seen situations, for example, even in my own business, where I get a fixed fee of services, but everybody is paying attention to their time and energy. And then what they do is they minimalize the service because they're not backing into the hourly rate that they think they should be earning, which serves no purpose.
There's pros and cons on both sides of the coin. You get fixed fee, so it means you don't care if that deal goes through or not. You're already been paid. But
100%.
On the other side, if you get something on success, maybe you're misrepresenting or not protecting the interest of your client as an attorney or lawyer, it should be. So probably you ignore some little
and here's the thing.
Because you want this deal to go through the line.
100%. Here's the thing that's interesting on this point too, that I think is relevant. It's like, look, again, I've been doing this almost 25 years. If people come in and they go, we're going to do this particular scope and we're totally aligned and blah, 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 and you sit down with them and well, of course you can create a vanilla scope where you can, but that that type of arrangement is typically better for things like this. You're incorporating for the first time. You have a business, your wife is your business partner. Maybe it's not your wife that's your business partner, but it's somebody where there are some very serious guardrails. When you're talking about a bet the stakes transaction, I don't know in any one deal. All I can predict is that there is going to be something or multiple things in that deal that will be pain points and problem points that will take a hell of a lot of work to solve it, overcome it, change the momentum, shift more money that should be ours away from them to us, dealing with the necessary acrimony that will happen inevitably. I don't care if it was Maria Teresa when you're talking about a lot of money, and getting you to the end to get a life-changing outcome or a company-changing outcome or whatever. So for me, it goes back to extreme transparency from the beginning and then sticking to it. I don't know exactly what this is going to cost from beginning to end, but here's what I can tell you. I can tell you if you follow my lead on the term sheet, it's probably going to cost about this. And when we get there, and if we do a great job on the term sheet, I'm going to have a way better idea to tell you what it should cost to get to step 2 and 3 and 4. That's the way that we try to go about it. So there's a massive educational and sales component to that because so many random anybody can throw out, I'll charge you a fixed fee, but maybe they're out of law school and they don't know what they're doing and they need, $5,000 to pay the rent. That's not what we're all about, right?
Yep. Got it. You've been involved in countless M&A deals representing buyers and sellers over the years. So what trends in M&A worlds are really catching your attention right now, which is happening in the US?
Yeah, great question. The first trend I think we're all seeing is that the market's been down from, in my experience, it was about July of 2022 where I noticed that through now. It seems like there's a little bit of an uptick, but I'm not going to call it what I think it was back then. A lot of which was driven by inflation, higher interest rates, and who knows, kind of what felt like a weird economy in that the stock market's been going crazy, but the price of groceries and everything else has also gone crazy. So who knows what that means in the scheme of it. But what I'm seeing on that is deals are harder to get done right now. Due diligence is slower. Buyers are more cautious because the money that they're borrowing comes with a higher price tag, by the way, or their equity with all their limited partners who need to earn a certain amount of investment or return, and then that all gets factored into leverage and so forth when you're talking about private equity and the cost of money in general. And on the lower side of businesses, say $10 million, $5 to $10 million, and even above that, I've seen this odd trend, which is the acquirer very fervently trying to take a position that, hey, you're going to have some serious skin in the game. You're going to have some rollover equity. Maybe there's an earnout on top of that. Maybe there's going to be some sort of promissory note on top of that, some cash, and then you're going to have an employment relationship. And all of that can sound wonderful on the surface in the sales conversations. Oh, and we return 3x on the equity. And look at what this earnout can be. This earnout could be a premium. When you get into the fine print and the heavy duty, though, what you find a lot of times is they might go, hey, by the way, I'm gonna terminate your promissory note if you're no longer employed here for any reason. What?
Yeah.
I thought a promissory note was like a instrument that was money that was the same as cash, except that it was an obligation to pay a set amount of money at some point. I didn't know that it just. So what does that tell you? That tells you that's not really part of the price. Okay. If you're going to make it part of the price, you have to negotiate it incredibly tightly.
Yeah.
Like, okay, you can't pull it back, and what would be the extreme situations where you could or whatever. Rollover equity, a lot of times there's a tie to that, and they might say, okay, great, you're going to roll $2 million of your price.
Yeah.
Oh, but by the way, if you're not working here anymore or whatever, we'll be able to take that back at a depressed valuation or substitute you into one of our other portfolio companies that's worth pennies on the dollar or whatever. Oh, wait, so that $2 million that we negotiated was a part of the value, but we're just talking about the way it's paid. Like your money is greener than my money now when it comes to that $2 million. I mean, in my view, that's like me writing a $2 million check, right? Those are the points that become challenging. It's not coming up with the number typically. That's actually the easy part. The challenging part is monetizing the number and slicing and dicing it and putting it together and keeping everybody sane and on the same page and having hard conversations and where not to have hard conversations. In other words, the execution has gotten harder, and it always does when you're kind of going through a cyclical event where money has gotten tighter. So that's what I'm seeing in certain spaces.
I was having a conversation with someone the other day on my show. He said in last year there were record number of SBA loans applications approved, 70,000 of them. So that's kind of gives a upward trend because of all the young generation post-COVID. Everybody wants to be a business owner. They want to acquire a business using the SBA. How do you see that SBA coming into the play, and then all this young generation and that all big saying of baby boomers retiring? How do you see that in next 5 years, 10 years? How that's shaping
That's a great
up,
question. Great question. It's become, you nailed it. There's a ton of small business purchases going on. Like more than I've ever seen because of the advantages of the SBA. And there's just a lot of fairly priced money available to pretty much anybody if they want to get into owning their own small business. And that's really exciting. So to answer your question, we're seeing a lot of that, a record amount of that. And I think the SBA even loosened the rules in September 2024. So I think you're going to see more and more of that. And I think in today's virtual world where you can accomplish a lot without being and having to take up a large platform of real estate and virtual teams and stuff, you can really efficiently probably operate businesses at scale and lower costs than probably has ever existed in our lifetime. So I think it's just gonna continue to evolve exponentially. And I think for those that understand how to run a business or they have experience in a certain industry, it's really a great opportunity to take control of your own future and work for yourself and get money that wouldn't have been available to do so. Now that money, they're going to have you pledge everything in your, you're going to give your firstborn in the form of a pledge. But the reality is that's kind of the case if you want to get involved in buying a small, short of private equity or something where they're really using other people's money. But that's just kind of the cost of entry, right?
Yeah, it'll be interesting to see, though, how many of these business owners, the new business owner who acquire a business using SBA or any other maybe seller consideration, they get success. If they fail those, many of them are going to lose their houses because they put their homes at collateral or some other thing. So this is going to be also an interesting.
Yeah, and I think what's interesting there, what I've seen in a couple SBA related acquisitions that we've been involved in, like, so for example, there's normally some sort of seller carry as well as the SBA note to be repaid. And a lot of sellers are unaware that note is going to be subordinated in all respects. And so that's going to mean, for all intent and purposes, if you're going to get a payment on it, it's going to be because the SBA approved it or the SBA was completely paid off. So that's also another consideration on The sell side, the good news is that there's SBA money to allow the buyer to buy the business, and you can take some chips off the table. The other side of that is you have to be very savvy in understanding positions of collateral and what's the worth of any deferred compensation.
Yeah, what we have noticed, what I've noticed here in Dubai, UAE, we sell a lot of businesses. The success rate of once someone acquires a business is very, very low. I've seen 70-80% of the business owners who acquire a business, they somehow come back in the market within next first 12 months before they acquire a business. It requires, I think, the education and to make that transition of baby boomers retiring and the new young generation acquiring those business, a lot to do with an education, educating them how to run actually a business. Because running a business is a grind. It's not like dreaming. People are teaching them, oh, you become a business owner, a manager will manage for you, you travel the world, you work home. It's actually, the reality is totally different. I mean, business owner is being tough. It is.
It's not the social media
Yeah,
picture.
the social
for
media
sure.
pretends,
Yeah.
these, social media influencers, they tell them, oh, you can become a millionaire, you acquire 5 laundromat, do the roll up, settle it to a private equity, so easy.
I was homeless. I
Yeah.
was homeless 4 years ago. Now I have
Yeah.
a portfolio of
Yeah.
companies worth 300 million.
Exactly. Yeah.
Exactly.
I was sleeping on the street, and now I have this many companies, and actually, this is
Right.
not true. So
Right.
I think the education is going to play a big role for these business owners to be successful.
That's such a great
Yeah.
point. It's such a great point to hear, because I'm really active on LinkedIn, and
Yeah.
and I see this just in my community too. So many people have inquired, and they go, I want to buy a business with no money and pay it through the profits of the. It's like,
and they're going to repeat the process.
what does
They're
that
going to hire a
mean? That
manager
means
to
the
run a
seller's
business.
going to finance it for
Yeah.
you, and they're probably not going to
Yeah.
like you listen. Like, no one. Yes, they might finance it to a degree for you, but not completely. They're certainly going to have a lot of hooks. But also, it's really funny that you say that. I think that there is definitely a misconception that means, oh, I'm going to buy it and it's going to just perfectly run itself, and it's all going to. It's like, no, you're gonna have to build it up, and you're going to probably have to change and improve some things, because you've got to be able to find a way to not only recover your price but get a return on it. And working a small business, I don't care what it is, it's really time intensive for most of us, right? And then the goal is to.
So,
but yeah, you need to come in eyes wide open.
So someone, majority of our audience are business owners. So someone watching or listening this, our podcast. So what would you advise to a business owner if they're planning to exit or sell? What are if you have to say three points, 3 advice, so what would you advise them to work on?
Yeah, so I think the main thing, and then I'll kind of get the 3 points, but the main thing is seller preparedness. Okay, that process is going to take you a lot longer than you are going to want to be honest about. If you're really doing it the right way, you need to start preparing like 3 to 5 years out.
Yeah. Okay.
And what do I mean by that? You need to make sure that you are conducting your books, or a set of books, that when the time is right is going to be what we refer to as quality of earnings ready. I, for example, optimized my business for taxes, and I'm not going to probably ever sell my business. I push the boundaries on expenses and like so many other, but that's not optimal if you're looking at selling. So you need to start, there is a transition point where you have to kind of look at, there are add backs and so forth, as you know, to here, but they have to be, you have to have, pick and choose your battles you're going to fight on that. So quality of earnings ready, and running it in a manner that somebody who's going to come in and buy the business and who really is going to want to be removed from it, or removed to a degree, and is it self-sustaining. So what that means is your management team and your operations key people has got to be more than just you, right? So we talked about Q of E ready or Q of E of sorts, kind of depending on the size and scale of the business, transition team, and that transition team may be you, because a lot of times you've got to be there to educate the buyer. Certainly if it's private equity, that's not their business typically is. So what does that piece, so think about, what are you going to do to keep your team? You know, if a sale happens, what are you going to do to get Q of E ready? And then the third thing is, what are all those things that you know you would love to do if money was available, time was available, that really grease the skids so that you can try to achieve that next level of scale and really put some polish on the business. And it depends on business to business, you know, website presence, your sales system. So those are the kinds of things I would say, and those would be three that come to mind: preparedness, and when you think about how long it takes to get most business initiatives done, in the midst of all the chaos of running a business day to day, 2 or 3 years will sneak up on you on like that.
Right. Yeah.
And then let's call it 3.5, or maybe it's number one. Well in advance, you should be talking to your deal team. You should be talking to an attorney and try to change your mindset from, oh, I'm going to just bring this person in because they just fill in some blanks or whatever. No, we don't. And if that's who you hired, you're probably going to get hosed. A guy like Tahir and a great accountant that are going to educate you from the beginning, and they're going to be with you in 2 or 3 years. They're not looking for anything immediately, because that, as deal pros, that's a big part of what we do. We try to get involved earlier, educate you, and then when the time is right, you know we've done the right thing by you. So those would be the things that you should be thinking about, in my view.
Great advice. In short, plan your exit. Do not exit by accident. Yeah. So this is very important. Plan it.
Plan. It's not like selling a house.
Right. So
it's really not. Like
so Linden Law Partners firm. So what's next for you as a firm? Any big projects or goals on horizon in the next few years?
We've got, we think, some exciting deals that we'll dive into here pretty deeply. Sell side M&A deals involving private equity that are, order of magnitude, 30 to 70 million, depending on the particular deal. So that'll keep us occupied for a bit. So we're looking forward to that. We're also excited about that because we think it might be telling about where the economy is hopefully headed, and investors are starting to kind of ease the pockets and get back into the game more. From a firm perspective, we're being very strategic, entertaining, actually adding another small business firm where there's some synergies and so forth, and really looking at that and looking at adding some really strategic, very business-minded attorneys. So that's another thing. Just the evolution of the firm and growing our brand and reputation has afforded some cool opportunities there. So that's where I'm occupying most of my time these days, and then spending a lot of time. We're big into branding and marketing, as we think you have to be in this day and age, being thought leaders, and so always trying to come up with that next piece of content to resonate with people in an authentic way.
I'm going to end the show, but before we end the show, the last question, which is a very important question, I think. Legal AI, how AI is impacting legal profession, and how do you see AI is going to affect or complement the law in coming years to come?
I think it's, we're using it to a degree for certain tasks, and I've tried other tasks. I've tried to be robust on trying everything and figuring out where it's helpful and where it's not. There's probably tools I don't know about, but here's what my general sense is. I definitely think it's a game changer. I think it's a disruptor. Even in the last 6 to 9 months, for me, it went from more of a refining tool to actually a substantive help tool, because it's learning and always evolving. And so I think from a staffing standpoint and getting a lot of tasks done that attorneys were spending a lot of time on and billing a lot of more money for, I think those days are going away, because it can be incredibly powerful and effective. So I think it's a game changer. I don't think it's anytime soon going to suddenly manage deals for you. I don't think it's going to supply amazing negotiating advice.
Yeah.
It's not going to win or lose deals or cases for you. Individuals will still always do that, but it's a real thing, and we're trying to be on the front end of it. I think it's going to be an industry disruptor. I think that's going to be a positive, though.
Certainly will. Thank you, Pat. Thank you, everyone.
Thank you.
Thank you for being
Thanks for
with
having
us,
me. Appreciate
and we'll see you next time. Signing off, Tahir. Please follow my YouTube channel, and I bring an episode every week, and where we talk about business acquisition, merger acquisition. Thank you so much. All right.
Thanks, Tahir. Bye-bye.